This is Eric Mwadi with Mwadi.com, January 9th after the close. We have the markets trading lower this week. The Dow is down about 5% for the week, and all the major indices, the Dow, S&P, and the NASDAQ are all lower for the year. I don't know how you traded this week, but those of us who stayed short and never got caught up in the hype for rally in the market, we pretty much decent returns this week, to say the least. I thought it was a pretty hate to say it, but simple trading week, because it was always gonna be down based on what I was looking at. And if you follow me on Twitter, I think I pretty much stayed short throughout the week. The beginning of next week is gonna be a little tricky. We'll see how that plays out. I'll have another detailed video at the end of by the end of the weekend for you guys, as for my subscribers. So we'll see how what I find for the weekend. But for now, we had an relatively very easy money week if you are short. I don't know what you are looking at if you are long, but it is what it is. I hope you made money either way. Going into today's trade, if you look at the Dow, one of the reasons why I was pretty convinced, actually starting yesterday, that we were due for a huge point drop. This is a Dow 1-year daily, and this is down 1.64% for the day right there. And the reason being that we clipped the 50 level area on the RSI, on the daily RSI, and every time we clip that on either direction, we have huge swings for the day. So given that scenario, starting yesterday, and actually after yesterday's close, I did point out that this crossing below 50 is gonna guarantee those who are short the market a huge gain, and it did come today. So there you have it. Now this is Apple 1-year daily chart, and you're gonna use this only as an illustration, not to make a call on the stock. But if you take a look at Apple here in November, it was trading around 110 and dropped over the next 2 weeks from 110 all the way to under $80. So this drop right here from 110 to 180 started when we had this double top right here on the RSI, and I'll zoom in so you can see it. So you had this double top here on the RSI, was what made the stock move from 110 to around $79. So that's a huge drop. I mean, especially if you're playing the options. So we see that double tops like this one right here do influence sometimes, or they give you an indication what the market wants to do. It doesn't work all the time. You have to incorporate other factors, but that's something that you can simplify whenever you see it on a chart. So now, given that scenario, the backdrop of that explanation, let's take a look at this is UYG, the ProShares Financials Bull. Now, right off the bat, you see that we had coming into the year, we formed a double top on the RSI. You can see it right there, double top. And now we have this break of this blue trend line, so that's bearish. So some of the things that I'm looking at to still remain bearish right now, and markets might have movements from day to day, but based on what I see, I have no reason why I should be convinced this market wants to rally. So we play what we see and nothing else. So right now, double top right there, breaking this support line, so that cannot be bullish by any definition. Now we also have a flat 13-day moving average. I'm still waiting for this to resolve either lower or higher to tell us how long this move might last. If it resolves lower, then we can start seeing that this market, the general market, might actually be retesting those lows we made in late November sooner than most people thought. And so we remain to see whether we resolve lower or higher. Now, if we resolve higher on this 13-day moving average, then I think the market might have a good move higher in the first quarter. But right now I'm defaulting to a weak market unless proven otherwise. Let's take a look at the Airline Index. Actually, late yesterday in the evening, I noticed also that it was forming a double top on the Airline Index. I'll zoom in so you can see it. You see the double top on the RSI. That was another indication for me coming into the job numbers today that this market was not going to be as hot as many would have thought, and I did point that out on my blog. So weakness galore. So I'm going to have another video here by the end of the weekend for maybe have some stock picks and what to look for early next week. Don't forget we have options expiration, so be careful out there. If you're long, I don't know, you gotta be careful because its market is not looking very hot. Let me bring back the Dow 1-year daily, because you'll notice that even the Dow forms some kind of a double top right there. You see it on the RSI, which is a bearish signal, and also we have a break, the initial stages of a breaking this red support line here, which has held the market intact since this lows here in late November. So that trend is being broken as of Friday's close. So be careful out there. Wait for the video by the end of the weekend for you subscribers. Enjoy the weekend. Peace and blessings to you. This is Eric Muave. I am out.